Well, it was a strong bounce back day for the markets. In fact, the Dow Jones and the S&P 500 had their first up day in the last 5 sessions, each of them up about 0.5%. But importantly, they caught a little bit of a bounce above their rising moving averages. So in many cases, the uptrend that we've seen for most of this year has not been broken despite the difficulties of the last 4 sessions prior to today. Today's trade application, I do want to focus on one of the outperforming sectors out there that actually had what's known as a close above the high of the low day today, and that sector itself is above a rising moving average, and the particular stock that I want to focus on shows a lot of the same types of charting features. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 14th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. Remember, you can subscribe to our YouTube channel, and while you're there, check out our description area that'll allow you to see a link that can help you sign up for one of our email distribution lists, which will entitle you to the various stocks that are giving you overbought and oversold cluster signals within the S&P 500. In addition to YouTube, we're also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee if you're not doing so already. And if you get benefit out of these Market Outlook videos, make sure you're clicking like and retweet on Twitter whenever you see David and I post them as well. And lastly, we're also on Facebook. Feel free to jot down that group web address you see on the logo in front of you and join us over there in that Facebook group. All right, with that, let's go ahead and take a look at some of our market analysis for the day. For those of you that are premium Market Scholar subscribers, you'll notice that I do have chart 4B pulled up here. And this is our chart that can show us all 4 of the major indices all in one place, and also be able to look at the market forecast indicator on all 4 of the charts at the same time. Remember, the market forecast indicator is a technical indicator that you can find on the Thinkorswim platform, and it's this area with the green, the red, and the blue lines below each of these charts. Now, each of these charts is 3 months in length, and how you kind of decipher the background colors, you'll notice pinks and greens as far as the background colors of the charts themselves. That will distinguish whether we consider these to have bullish or bearish intermediate term postures. Remember, there's all different types of postures out there, so make sure you're following whatever style of trading that you specifically are looking for. But in this particular presentation, we look at an intermediate time frame to discuss posture. And as you can see, we do have bullish postures across the board here with these 4 different indices, because the background color next to the most recent price candle in each of the 4 charts is indeed green. And of course, that means that the intermediate term line, which is the green line on the market forecast indicator, is either in the upper reversal zone, like you can see that it is here with the Dow Jones, or it's just simply traveling higher between 20 and 80, like you can see down here with the Russell 2000. Now, notice that the Russell 2000 is a little bit different than the others, because yesterday you did have the Russell 2000 with a weekly bearish posture. With today's nice move higher of 1% to the upside for the Russell, we now flip back to a bullish posture there. But as I've been stating for the last several weeks, I consider the Russell 2000 sideways. In fact, we have an iron condor on Russell 2000 right now in this particular presentation, this class portfolio here. Some of you thought that it was going to break out to the upside or the downside, and the reason we did an iron condor trade at the time is we thought, at least I thought as the presenter, that Russell 2000 would continue to go sideways. So far, that's been the case. Now, we'll see if anything can get established from a directional perspective, but right now I'm still making the assumption Russell 2000 is sideways until we see a breakout of either the upside resistance or the downside support. The others are a bit more directional. Notice that when we're looking at the moving average lines themselves, this is a kind of a more strong kind of a trend that you're seeing right here. The degree of that trend, or the degree of the line itself, is at a more rapid, higher ascent, however you want to describe that. But what I did appreciate seeing out of the market today was kind of a stoppage of the 4 prior candles. In the case of the Dow Jones, these 4 right here, and then in the case of the S&P 500, these 4 right here. And of course, today we got a bullish day. where they stopped the decline was important to me, because if we would have stopped the decline underneath the moving average, then I start getting the impression that the bears are a little bit stronger than maybe I'm giving them credit for. But right now it does appear to me that the bulls are still in charge of this market until we see evidence to suggest that they're not. As long as they stay above that rising moving average, I think the markets are in reasonably good shape. So that's where we stand with these four different indices right here, bullish postures across the board. Let's go ahead and take a look now at our next chart setup. This is our 3 green arrows chart setup, and 3 green arrows is just a way for us to look at 3 different technical indicators. In this case, the 30-day moving average, the MACD, and the stochastics, to see if we have any kind of trending types of trade setups that are available to us. And in this particular chart setup, what you'll know is that the background color of the chart is telling you whether you have 3 green arrows. If so, it's going to have a green background, or if you have 3 red arrows, it's going to have a red background, or if it's a mix of those arrows, it'll be white. And that's where we stand with the S&P 500 and the Dow Jones. Notice that that's a white background color. Reason for that is you've got red arrows on the MACD and the stochastics, but we still have that we retain that green arrow on the moving average from way back here in July. Now, when you start looking down below, the NASDAQ and the Russell 2000 actually do have 3 green arrows. We got them today in both of those cases, because you can see here in the case of the NASDAQ, we got the green arrow on the MACD that completed the 3rd green arrow. In the case of the Russell 2000, we actually got the green arrow with that phantom green arrow down below on the stochastics. So we're starting to see some more of that resilience there. But again, part of that is just due to the fact that they were up more today percentage-wise. So again, Russell 2000 was up 1% today. NASDAQ was up 0.65% today, whereas the S&P and the Dow were down are up a little bit less than that. And so I think all 4 of the charts look fine. The Russell, I think, is still a little bit more flattish in my own perspective, but the other charts do look like they're still trying to trend higher as we go into the late summer months here in 2018. Let's go ahead and take a look now at our next chart setup. This will be our 1040 crossover method. And as a reminder, this is a different time frame that we're looking at on this particular chart, which is chart 4D for those of you that are following along at home. This is a weekly candle chart that we're looking at here, and it's 3 years in length. So it gives us a much longer time period to look at here, as opposed to the other charts that we looked at that were only 3 months in length. What this allows for is to us to see, different styles of investors and traders out there. What are they thinking? Not everybody thinks in the same terms, obviously. So longer term investors right now still appear comfortable. And the reason I say that is we're looking for what's known as a 1040 crossover. And in this particular chart setup, the orange line represents the 10-period exponential moving average. The blue line represents the 40-period exponential moving average. And the last time we had any crossovers of these 4 major indices here in the United States was over 2 years ago. That's why the background color of the chart has stayed green in each of these cases over the last 2 years. So if the orange line ever does fall below that blue line, then we start getting the impression that the longer term posture, the longer term trends are starting to deteriorate. But right now, we're not at that level. We're still thinking it's all systems go. It might not be going up quite as rapidly as we saw in 2017. Most markets don't. But on the whole, this is a market that kind of is naturally levitating higher. Let's go ahead and do some 12 grid analysis now, starting with the 12 grids here on chart 4E. All right, so as this loads up, this is an intermarket analysis 12 grid. There she goes. And as a reminder, when we're looking at the pink background colors on these 12 grids, what it means is we have a bearish posture using that intermediate term line on the market forecast indicator. And if we have a green background, it means we have a bullish posture. So as we're looking at these various 12 grids, what my eye is trying to identify is just where do we have strong trends, or potentially where do we have reversals of trends that are taking place that are noteworthy. And so as I look at this, the first thing that does catch my eye is what continues to happen with the dollar. I know that David and I probably sound like a broken record when we discuss the dollar in this presentation, because it's the same old, same old. Well, you look down below here, lower left-hand corner, there's your UUP, and yes, it is true, we are hitting new 3-month highs there. And as a reminder, whenever the dollar is strong, oftentimes we do find that commodities are weak, and that is kind of what we're seeing here as well. Gold remains in a really strong downtrend. You also see ag commodities in a very strong downtrend. And crude oil does have a bearish posture, but its trend doesn't look as bad. There's been maybe a little bit more demand for crude oil than some of those other commodities. But one thing I will point out, just to get it off out there on the record, is that we do have what's known as an oversold cluster signal on gold. As you can see, that's identified by this little green dot right here. And remember, if you ever wanted to see the full market forecast in addition to that green dot, just to kind of confirm it with your own eyes, you can just right click on one of those charts and then go to maximize sell. Here you'll see the /GC, which is the gold futures contracts. And you can see that all three of those colored lines on the market forecast indicator are in the lower reversal zone, which signify that oversold cluster signal. Now, before you get carried away with that, be aware that the oversold cluster signal, generally speaking, is not as predictive, I guess if you want to use that word, as in a commodity that has a lot more volatility like gold, as it might be with a big index of stocks like the S&P 500. So I just want to be clear on that point, because some of you are looking at these green dots here that you're seeing previously on this 3-month chart, and you can see that if you had expected a reversion to the mean to take place, you didn't always get it. Now on these 3 green dots over here, you did have a little bit of a reversion to the mean, but it didn't change the trend. That's a very important understanding of this. We may very well get a little bit of a tick higher in gold based off of this oversold signal that we're getting today, but until it starts closing and staying above that that falling moving average right there, I would assume that the trend continues to be to the downside. So you don't want to get too aggressive with your mentality around that. Maybe consider smaller position sizes if you're going to do something that's a bit more counter trend. Let's go ahead and now take a look at another 12 grid here. In this case, let's look at the foreign stock markets. As a reminder, when the US dollar is strong like it has been, it does put added pressure on foreign stock markets traditionally. Now, there are cases where that trend can be bucked, and we do see a couple of cases like India up here has been rather impressive. India did have 3 straight down days before today's pop back higher, but it remains with a bullish posture, and that was a real nice snapback bounce today. I like to see that bounce off that rising moving average like we saw yesterday. So India was up a nice and healthy 1.46% today. Canada is the only other foreign market that retains a bullish posture right now, and you can see that we just with today's close got up above that moving average again, but just barely. The chart isn't nearly as strong as India has been here over the last month or so. The other charts are all bearish according to the posture setting that we use with that intermediate line on the market forecast. But I would say that, like in the case of Israel, yes, you do have a bearish posture. That's what that background color is telling us. But if you look at price, it is above that moving average right there. So despite the market forecast saying that it does have a bearish posture, I don't think I'd be willing to write this one off quite yet, considering that we still have decent price action on that one. So that seems to be one of the stronger areas along with India. Otherwise, most of the other charts do look pretty ugly. You do have an oversold signal here on the United Kingdom, so maybe we're due for a little bit of a reversion to the mean there. We had 2 oversold signals here on Russia yesterday and the day before, and we did get a nice snapback rally today in Russia, up 2.4%. So, maybe some of these areas are due for a little bit of a bounce, but for the most part, you look at these charts in front of you, and you don't see a whole lot of exciting trends that are available. Let's now take a look at what's going on in the U.S. market. So for this, I'm going to go over here to chart 4G. And this will be our U.S. sectors 12 grid. Remember, in the upper left-hand corner here is where we have the S&P 500, and then all the other charts on there are the 11 sectors that make up the S&P 500. Now, as you look at this, it's a bit of a mixed picture. It's kind of interesting that the S&P 500 has a bullish posture right now, but when you look at the sectors, only 4 out of the 11 sectors have bullish postures, which is technology, discretionary, healthcare, and telecom. Now, outside of telecom, those other 3 sectors are 3 of the biggest from a components perspective, and, in the case of technology, also from a market cap perspective. So that's how you can have a situation where most of the sectors are bearish, from a posture perspective, but the S&P 500 can actually have a bullish posture. It's because the few sectors that are bullish are some of the biggest out there, and most of you are aware that the S&P 500 is a market cap weighted index. Well, what I wanted to point out here is that the discretionary space has been catching my eye. This is XLY in your upper right-hand corner here. Notice that it's up 7.7% over the last 3 months. And we had a nice bounce here today. In fact, that's what you could define as a close above the high of the low day right there. And again, I like the fact that when it did pull back in the prior 3 sessions, it did not close below that rising moving average. I think that's a sign of strength, that the bulls are still in control of that story right there. Now, in particular, within the discretionary space, I was really impressed with retail. So for that discussion, let me come on over here and go back to chart 4A. And I wanted to show you XRT. And XRT is an ETF that tracks specifically the retail industry. So remember that the consumer discretionary is a sector that includes lots of different names, but retail is going to be kind of a subgroup of that within the industries themselves. And you can see we had a really nice breakout amongst a lot of retail names here today. Look at that candle on XRT. That's a strong sign because remember, the retail space might not have a lot of behemoths in it, but it does have lots and lots of components. There are lots of little retailers out there. So it's a good sign for breadth within the consumer discretionary sector itself. So it's good to see that we are now at 3-month highs and close near the highs of the session here on XRT today. Now, some of you might be wondering, well, how did that occur? Well, let's go over here to the Market Watch tab. And I'm going to pull up our sectors. So give me just a second on that. Let's pull up the sector ETFs here. Just get a sense of who the biggest winners and losers were today. And you do have XLY as the discretionary space as the biggest winner. On the downside, we did have XLU, but notice what happened. This is a full 11 sector sweep that we had here. All 11 sectors did close in the green today. So it was a nice, robust rally across the board. It wasn't just carried by 1 or 2 sectors that were out there. But again, we did have those consumer discretionary names really making their move. So I wanted to kind of point out one name in particular. Let's go over here to the discretionary stocks within the S&P 500, and you'll notice Tapestry. Now, this is the old Coach, for those of you that don't recognize that name, Tapestry. And so they sell handbags and accessories and different things like that. Well, anyway, they came out and apparently investors and traders really liked the number that they gave as far as earnings went. That stock was up 12% today. That's a big move. Advanced Auto Parts was up 7.7%. Gap was up 4%. L Brands up 5% or 4%, right around there. Macy's up 4%. So there's a lot of those, and even Nordstrom up there as well. And there's AutoZone. So you kind of had that feel of clothing retail along with automotive parts retail really leading this market today, which does remind me, like over here on the on the internet. Remember that for those of you that follow me on Twitter, one of the things that I do every morning at 9 a.m. Eastern time, a half an hour before the market opens, is give you guys a heads up on what stocks are going to be moving before the market opens. And so you can kind of get a sense here with the 9 at 9 today, how some of those names did. And we could kind of have a feel before the market even opened today what kind of market it was going to be. You saw Advanced Auto Parts as the leading stock before the market opened. It was up about 6% before the market even opened. And then there's Tapestry right there that was up 5% at that time. So remember, Tapestry closed the day up 12%. Pre-market, it was only up 5%, which to some people might have seemed like a lot, but there was still a lot of meat left on that bone for people that decided they wanted to jump in on that. So remember, if you get value out of these 9 at 9s every morning, make sure you're clicking like and retweet as well. That way, the Twitter algorithms know that you like to see that. So that way, when you're on Twitter, they will automatically put that into your Twitter feed as well. The other thing that I would mention regarding discretionary, now that we're over here, is remember that on my tweet or Twitter feed or on the blog, I posted in a couple different places. I have this sector selector, and notice that week over week when I put this together as of last Friday night, the discretionary space right here, which is represented kind of by this yellow/gold kind of ball right there, notice that it went from 9th rank to 7th rank here on a week-over-week basis. Now, this does include a lot more stocks than are just in the S&P 500, so be aware of that, but it's still a good sign to see yet one other reason to kind of get the impression that discretionary is starting to work right now. For those of you that are watching this on the website of ours, marketscholars.com. Make sure you're also coming down below the Market Outlook tweets and clicking like, and also on Facebook here, and then you can also click like on our website right here. That just lets David and I know that you like these videos and you want us to continue to do them for you on a daily basis. All right, so with that, let's go ahead and do our trade application example for the day with kind of that insight about kind of what's working in the marketplace right now with discretionary and retail. And so that leads us to Tractor Supply. Yes, not a name that we probably talk about a whole lot. Now, I grew up in South Dakota. I didn't grow up on a tractor, but been on one a few times. So anyway, kind of fun to see that there's actually a store out there that takes advantage of that rural lifestyle that some folks that have some land out there might be able to take advantage of. So Tractor Supply is kind of an interesting company in that it is a retailer. Some of you that, depending on where you live, probably not Manhattan or San Francisco, but if you live in the heartland somewhere, you've probably driven by a Tractor Supply store before, and you'll know that they sell a lot of things that probably couldn't be easily replaced by Amazon, right? You're not going to buy a tractor off of Amazon as an example, or a big bag of chicken feed or something along those lines. At least I don't think you will. I never want to bet against Jeff Bezos, but so far he's kind of left the farm supply area alone. And so if you expect that to continue and you expect Tractor Supply to continue to try to take advantage of some of those themes in retail, well, you look at this chart and you say, well, this is a stock that appears to be drifting higher. It's not lighting the world on fire, right? It's not ripping higher like we've seen with other types of stocks out there. But I think, if you look at this chart, it's one that has allowed somebody to take advantage of a slightly increasing stock price without a lot of volatility. For some of you, that might be an appealing feature of a chart. And so as you can see right here, we had a really nice day on Tractor Supply. This stock was up 2.5% today, so healthily beating the averages for the sector and the industry and the markets at large. Not only that, but we had 3 prior down days before that, which did stop above this rising moving average again, another theme of this presentation today. And then, of course, we got what's known as that close above the high of the low day, or some of you might refer to it as a hold. And not only that, but you'll notice that we close near the highs of the candle as well. In fact, if you look at this 3-month chart right here, our closing price today was the highest closing price in the last 3 months. Yes, there was on an intraday basis, we got a little bit higher back here after they reported their last earnings, but we closed down here on that candle. So this is actually the highest close for Tractor Supply in the last 3 months. And you can see that the background color of the chart is green, signifying to us that from a market forecast perspective, this green line is about ready to enter that upper reversal zone. And so we do consider this a strongly bullish trend at this time. So with that, let's go ahead and take a look at our options chain over here. And I wanted to kind of take a glance at the September contracts with 38 days left until expiration. Now notice that there's not a whole lot of open interest in a lot of these contracts, but one that does stick out like a sore thumb is right here. You'll notice that the $85 calls in September have about 2,100 contracts in the open interest, which is multiples of all the other contracts around it. Now that doesn't mean that this is guaranteed that the stock goes up, down, or otherwise. It just simply means that there's a big pool of traders that are trading this specific contract. They could be trading it to the downside or the upside. Remember, you can both sell and buy calls, depending on what you're trying to do or accomplish with your trade. So what I thought we would do in today's session is what's known as a buy right. And what that means is we don't have a position in Tractor Supply yet. Many of you probably don't either. And so you could certainly go out there and just buy the stock outright. There's nothing wrong with that. After all, the trend is decent enough. But because this isn't like a skyrocketing stock here, it's more of one that's just drifting higher. Another thought is you could buy the stock and immediately sell some premium against it in order to help offset some of the costs of the purchase of the stock itself. And so that's where a buy right comes into play. Now remember, a buy right is effectively the same thing as selling a covered call. The difference being with a covered call, you already own the stock ahead of time. In this case, we don't own Tractor Supply. So as part of this trade, we need to both buy shares of Tractor Supply, at least 100 shares, and then sell the call against that position. So that's what we're going to practice here tonight with this trade application example. So with the $85 call, notice that the bid is 85 cents. The ask is $1.05. The last traded price was 90 cents. So that would be kind of setting your expectations as far as what you could get filled at here. And of course, since this is conducted after the market is closed at this current time, we don't know for sure where we're going to get filled on this starting on Wednesday morning, but at least that's a good way to kind of gauge your expectations. So in order to kind of do this type of a buy right type of a trade, I'm just going to right click on either the bid or the ask of the contract that's going to be part of the trade. And once I've right clicked, I can then go to buy, and then I'll come over here to what's called a covered stock. So that's another kind of term for it, buy right or covered stock. It's basically the same thing. So I'm going to choose covered stock right here. That loads up our trade down below. Now notice what's happening. There's two different lines of our trade. One of the lines is buying us 100 shares of the stock itself. And you can see it says plus 100 and it says stock right over here. The other part of the trade is that top line where it says -1, and that is we are selling a call at the same time. So yes, we are limiting our upside potential beyond $85, but the benefit that we get of that is we are taking in that premium to begin the trade. So notice that what's going to come out of our pocket when we initiate this trade is at $80.51. So notice that the stock is actually trading at 81.48. So some of you are wondering, well, why are we going to be able to buy it cheaper? And the reason is that the platform is basically subtracting out the credit that we're going to receive when we sell that call out of the price of the security right now. So it's kind of like a way where you buy the stock a little bit on sale, if you want to think about it from that terms, but what you give up in that is that upside potential. So if you think this stock is going to skyrocket way beyond $85, then you would not want to do a trade like this. But if you think it's just going to kind of continue coasting a little bit higher as the next 38 days tick on until the September contracts, then perhaps it could be a useful trade example there in paper money. So let me go ahead and click on confirm and send, review this one last time, and then we'll fire that off and see if we can get filled tomorrow morning. All right, well, I want to thank you for joining me here today. Again, a strong day in the market, a nice bounce back day after several days of selling. The good news is many of the trends continue to be intact for the bulls as we head into the last part of summer right here. In particular, keep your eyes on the consumer discretionary sector. Keep your eye on the retail industry group, and in this case we've got some farm retailing that we're going to do with our trade application example for tonight. So with that, remember to get out there, click like on Twitter and on Facebook and all that fun stuff, and remember David will be back with you tomorrow, and then I'll be back in the saddle on Thursday. So until then, best of success with your trades and your investments. Goodbye for now.